morning, everybody, and welcome to SFI Live. It's March already, which is a little bit shocking. We are here again to teach you a little bit about the mortgage industry, hopefully. And I've been ditched by both Holly and Tony this time, but that does mean I get the pleasure of two great people to join me this time. So I'm going to quickly go around the room for those of you who haven't met them before. Debs, I'm going to come to you first. You're first on my screen. Debs, you want to do a little introduction of who you are, what you do at Saffron?
Yes, I'm one of the BDMs, so I'm based in the office, but more so currently doing intermediary team leader. So I've been at Saffron now for 6 years. So quite happy to discuss any criteria or any cases if ever anyone wants to talk to me. But yeah, I've been here 6 years now.
And this is on your second webinar, so welcome.
Second one.
Welcome to SFI Live. Nice to have you here. And Phil, you've done a few more than Debs. How are you doing? Why don't you introduce yourself and just explain to the audience who you are in case they don't know you?
Yeah, I'm Phil Lawford. 12 months with the Society this month on the 1st of March. It's gone really quickly. I'm one of the field-based business development managers and now covering national accounts.
Lovely. That's very recent as well, isn't it? So there's a reason for that as well. And you'll find out a little bit about that later. We've got an introduction to do to a new member of the Saffron for Intermediaries team. So we'll get around to that a little bit later on. So just a little bit of housekeeping stuff. For those of you who haven't joined us before, this is fully interactive. So we're looking for your questions and we're going to answer them. We're here to talk about self-employed and contractor specialist mortgages at the first part of the webinar. For the second part, we're moving over to a criteria and case clinic. So no personal details, but if you're working on a case or you've got a question, it doesn't have to be self-employed or contractor, but obviously we'll take those as priority. But any case, anything you've got that's slightly out of the ordinary, we might be able to help with, then do pop your questions in the chat room. Chat room's on the right-hand side. I'll keep an eye on them and I'll put them to the panel as we go. We've got some predetermined questions we're going to work through first. So please do get those in. Use the chat room to chat to others. Feel free to chat around and put questions. As I say, the chat room's there for your benefit. But first, one more thing I'm supposed to tell you. CPD certificates will be provided at the end of the webinar. So they will be provided at the end of the webinar. So stick with us and I will send those out. They'll be sent directly to you, to your browser, where you can download them, keep them in your files. So that's enough of my waffling. Let's get on to what we're here to talk about. So we're here to talk about self-employed and contractor. We're going to start with self-employed. It's one of those topics that we seem to talk about quite a lot at the moment, the guys will say, not just internally and with me, but certainly externally, because there's been a sense of the self-employed being a little bit unlooked after, let's just say, by the government during the pandemic, which has led to decisions being made that can affect applications. And also that pandemic year was pretty much a bad anomaly. And I hate to use the word unprecedented because everybody does, but it was. So we're here to kind of dispel some of the myths that, oh my God, I can't get a mortgage because I haven't got 3 years accounts. And oh my God, I had a really crap year, so I'm not going to be able to do this. So we're going to dispel some of those myths. That's what we're here for today. So first of all, last year, Phil, and Debs, to be fair, you're both here. We changed quite a lot about the underwriting and the criteria on a self-employed mortgage. So can we just start, Phil, I'm going to come to you. Just start with what those changes were and what it means to the self-employed applicants for the brokers that are watching.
Yeah, absolutely. The first bit that was taken, that was listening directly to broker feedback we had during that turbulent period and consulting with the wider industry, was that obviously come 2021 year, that tax year, that was going to create a problem for a lot of businesses. So there's a lot of good businesses that have been trading very well, very profitably for years through no fault of their own. They weren't able to trade fully for a year during, over a year, but certainly particularly during the early part of the pandemic. So that would naturally affect their business profits and their self-employed income. So we gave our underwriters discretion to be able to take a view and ignore the COVID tax year 2021. If we were satisfied that was the downturn was due to the pandemic, and we could see the businesses trading normally at pre-pandemic levels now. So that was the first thing we did, was giving underwriter discretion. The second thing we did was looked at self-employed specialist product. So we saw increased demand for that at higher loan to values. So with as little as 1 year's accounts plus the projection, we can now lend up to 90% loan to value. So those are the two main changes to self-employed, and they were really, really well received.
That's really good to hear. So, Debs, has that meant that you've had more cases coming to you now? Have you got more brokers coming to you with the cases for self-employed? More to the point, are you having a little bit more success with those applications?
Yeah, we are. So we have seen an increase, definitely. Like Phil said, really, because we've got the opportunity to look at those clients that have only got the 1 year's accounts, but also potentially ignore a poor COVID year, we have absolutely seen an increase in business. We're able to apply a kind of a manual underwriting approach where we can say to, to clients, we don't want to have to say no if we can say yes. If we've got a genuine reason to be able to ignore a 2021 year that's been poor, then we want to be able to say yes, as long as we can back it up with 3 months worth of bank statements that prove that you're back to where you were before with your business. So we can say you're back to where you were before. We are more than happy to look at lending to you if possible. And it has seen a definite increase in business. Absolutely.
That's good to hear. So come on then, Debs. I'm going to put you on the spot. You've taken Holly's place. You've got to keep up with Holly. Let's list it. Tell me about the product. Break the product down. Tell us what. Phil's giving you a bit of a helping hand with the 90% LTV, but let's talk about the details. So what do we need? And let's actually talk about the common sense approach of it too. So maybe just give them a little bit of hints on what to do on the applications to help the underwriters along.
Yeah. So self-employed product. So 90% loan to value. As a maximum. We've got fixed, we've got variable rate products. As long as you've got 12 full months trading account. So it needs to be that if you've only got 9 months trading, we wouldn't be able to consider it. It does have to be a full 12 months trading account. You do need to have a projection. Now, although we don't lend on projection figures, we need to see that the business for the future year is going to be as good as it has been, or not better than it was for the current year. So you need a projection. If you haven't got a projection figure, you won't be able to move forward with a DIP because you need 2 sets of figures for the decision in principle. The way to help it is really to make sure that the business is sustainable. So if you're a director, if you're 100% director of the business, we would typically look to lend on dividend and salary. If you're a sole trader, we would lend on obviously net profit anyway. If you've got a company that takes little dividend, then we are able to consider also lending on net profit after tax plus salary. However, what the underwriters are going to look to do is to make sure that that business can sustain that approach moving forward if we're systematically taking out the net profit. But we can look at lending on net profit after tax plus salary as well. But with all cases, if you've got, as a broker, got anything that you feel is a little bit out there or a little bit you're unsure about the case, please just give us a call as a BDM team. We are more than happy to talk through any cases. And if you can't contact us, or if you feel you want to talk it through via, a sort of a web chat, you can do that as well. So we've got many ways that you can contact us.
We'll give you all the details of where to find things like the web chat and all the forms and documentation a little bit later on. So just watch out to the end. We'll give you all the details you need there. So thanks for that. So just to confirm, because we're talking about the pandemic year, the last year's accounts are okay because actually we were outside of the initial pandemic, worst pandemic year. So actually, if they've started trading, you could have started trading during the worst pandemic year and actually succeeded well. So I know the reason I'm bringing this up, I know a lot of employed people moved to be self-employed or diversified, or self-employed people diversified and started a different type of company or different type of trade. So there's many different scenarios that this can benefit, isn't there?
Yeah.
So you've got the 3 years accounts, happy days. If you haven't, that 1 year can be this last year, or we can discount the year before. Is that just to summarize? Is that right, Phil?
Yeah. So providing we're satisfied that the reason for that downturn what was due to COVID, then yeah, we can discount it. I mean, we have had some inquiries come our way we've not been able to help with, where there's been other reasons in play as well. But providing it's COVID related, that's okay. And I think it's important for first time brokers who've using a new lender, and you're taking that brave step of trying somebody else away from you tried and tested lenders, is we as a sales team, we meet with the underwriters every morning at 9:30. So if you've discussed the case with me or the team during the day, the following morning at 9:30 we can raise that and talk that through with underwriting, to give you that bit more certainty when you submit your first dip. So I think it's fair to say, isn't it, Deb, that our morning underwriting surgery, we'll call it, has been really successful in helping us get business through because of any quirks or bumps. We've been able to chat it through and iron some of those out with the decision makers. Yeah,
I think. Just looking from the outside in, I don't work for Saffron, as everyone knows. I'm just a host. But looking from the outside in and talking to brokers about what we're going to talk about on SFI Live or Not So Live, the podcast, I get regularly that you have a stronger understanding as a BDM team of the underwriting process than most would consider. So actually, there's a little bit of a benefit, and I know Tony's not here to talk about it, so I'm going to do it for him. There is more plans to get you guys with the underwriters and actually becoming much more underwriter focused as BDMs, but also bringing those underwriters forward. So watch this space on that front. There you go, Tony. I've done it for you. If anyone wonders, by the way, Tony's currently skiing in France, so don't wish him well. He's having a holiday. So I think for me, I'm gonna do something else that Tony and I say all the time with this common sense lending approach. It's telling the story, isn't it? I think there's all well and good looking at a form, but actually it's about elaborating on that and saying, look, this is what they are. Just tell us the story. Isn't that right, Deb?
Yeah, it is. It's about, there's the ability to add notes to the case. So if you've done a decision in principle, you can add notes to the case at the end, just to sort of give the underwriters a little bit more of an awareness about what your client is trying to do. So what is it that you want to say to the underwriters? What is it about the case that you think they need to be made aware of? And the underwriters can then have a look at it, just so that they can understand what it is that you're trying to put across. As Phil said, the underwriter morning meeting is where we get together and where we can say, we want to say yes to this case, but it doesn't quite fit the parameters, or we really don't want to say no. So we try and say yes wherever we possibly can, rather than that kind of let's say no approach. It really is us trying to get those cases through the door.
Okay, we're getting some questions in on this very subject.
Yeah, so I
think we've covered this, Jatinda, but I'm going to just put it to Deb anyway. Someone with only 1 year's accounts for new business started after the pandemic. Well, we can say after the pandemic, but after the worst of the pandemic. Then that's absolutely correct. You just need 1 year's account.
Yeah. 1 year's account. Yeah, as long as you've got, honestly, Jatinda, as long as you've got a projection as well as the 1 year's full of set of accounts, then do the decision in principle, but select one of the special self-employed products and go to no more than 90% loan to value. And that's what that product range will do.
I also know the answer to this one, but I wouldn't be doing a job to put it to you guys. So from Brian, I have a client with the opposite issue. He had his best ever year so far. This is because he's had to look for new business areas. I know this is quite common across the pandemic years. We look at the current year only rather than the average over the last 3 years. So this is an existing business. Can we just look at the last year, Phil?
Yeah. If there's an upward trend, then yes, we certainly can. Brian, what the underwriters will also be looking to get comfort with is that current best year ever is sustainable going forward. So it wasn't just a one-off and then it's going to go back down. So if there's an upward trend in sort of profitability for the business and income from it, and if you could get that supported by an accountant's projection or commentary on the current year that it's going to be no less than year 3, then we would be looking to support that.
Well, there we go. Hopefully, Jatinda and Brian, that answered those 2 questions for you. Another point of contention for the self-employed, coming from someone who's also self-employed as well as employed, was the SEISS grants. Everybody wanted them, apparently. Not necessarily the case. What we've found out since then, having spoken to 3 brokers and actually speaking to people I know, accountants actually encourage them to take the grants because actually it's a lifeline. They might not necessarily have needed it. So how are you handling that? If they've had the loan, are they then, and I've heard this from other lenders, are they then not qualified for that mortgage? Or is there some flexibility around it? Phil, looks like you're ready to answer this one.
Yeah, no. I mean, one thing I can say is we are very pragmatic. I've used that word a few times in terms of, particularly in terms of government support. So I know there are, as you say, Joe, there's some lenders that if they've had government support, then they've looked less kindly at the case. The only thing we're really looking at with the CEISS grants is that we want to make sure that they're not overinflating the business or the figures above what they were at pre-pandemic levels. So if they're no more than, then that's okay generally, and it's a similar scenario to bounce back loans, which again slightly different in that they have to be repaid. So generally, what we're looking with bounce back loans is to see what impact that might have on the affordability of the loan, of the mortgage with us, and the profitability of the business. So again, it always helps with if we can get that supported with a narrative from their accountants. So I suppose the takeout there is to get friendly and cozy with your clients' accountants as well.
Well, actually, good that you just mentioned accountants. Debs, I'm coming to you for this one. Phil Holton Philip has just said, would you accept a projection if the client does not use an accountant that provides the projection themselves? That's really hard to say. Debs?
Unfortunately not, no, Phil. That would need to be from an accountant.
Short but sweet, and straight to the point. From Smarty, I have a client who is self-employed and started business less than a year ago before, but he takes salary from his business. Would you consider employment income from his own business?
So if he's actually employed and we're actually trying to run on self-employed income, he does need to have 12 months worth of figures before we can actually take the self-employed income. So it does need to be a full 12 months. So self-employed to start a business, yeah. So you're literally looking at 12 months worth of income, I think, from that. We wouldn't be able to consider the case as a self-employed applicant until they've got 12 months worth of accounts. So although we can work on salary and dividend, you won't be able to do that until you've actually got a full 12 months. That's how I'm reading that particular inquiry.
Yeah, I saw it as because people set up you be self-employed, but actually still pay yourself on a POE system.
Yeah,
you could getting a salary every month, aren't you?
So fine, yeah, but so yeah, it will need to have submitted his first year, or the applicant will need to have submitted their first year's
before we could do it.
Trading accounts for us to help.
I hope that helps with that one, Swati. I'm going to move on to my next question from the pre-submitted, and actually it's a bit of a conversation, really, in that we are entering a cost of living crisis. It's a horrible thing to have to talk about, and I don't want to depress the webinar. We normally keep things upbeat, but there are going to be some issues with affordability. There are going to be some issues with cost of living. We're all facing it. It's not an individual thing. It's across the board, with national insurance affecting absolutely everybody that's employed. What does this mean for affordability going forward? How can we manage that as individuals, especially the self-employed, because it's much harder for them to manage their accounts, understand you've got business expenses going up as well as personal expenses going up. It's going to be difficult. How can they mitigate any of that and help along their applications? What can they do to prove that they're in a more stable situation? Because obviously we're all going to be on edge, including the underwriters, going, what's going to happen over the next 12 months? What can we do to make sure that we are demonstrating that we can afford the mortgage as self-employed people?
Yeah, I suppose as advisors, it's forward signposting your clients, I suppose, to get the house in order if they're either if they're planning to move, or not facilitating a product transfer and looking to remortgage, is particularly if you're using a manual underwriting lender, is to make sure that perhaps they are appearing to be in control of their finances. So it's making sure the bank statements are, conducted well. If there are anomalies there, unusual transactions or stuff that's happened, to tell us about it up front, so you can add notes when you're
that's quite commonly forgotten, isn't it? I think we've had this conversation before, Phil, where it's quite common that there's sort of blips on the bank statements, and actually, it's almost like a no, because of actually, if you'd explained it, it might have been a more chance of a yes. I think
so it's if there's the blip, but there's a story behind it, and a rationale as to why we could look at it, then tell us. I think that's the main bit, and that's the difference between a lender like ourselves and some of our peer lenders and the likes of your more high streety credit score lenders, where everything's more just decision made on algorithms. We're not that. We are very, very much more manual. So it's all about, we've said it every webinar I've been on, it's telling us the story behind it. So that, I think that's my biggest advice for advisors.
I think between all of us that have ever been on SFI Live, common sense lending and tell the story always come out in every single webinar. It doesn't matter what you're applying for. Just staying with that before we quickly jump to Ange, but just staying with that for a minute, you talked about bank statements. Let's also talk about adverse on credit as well, because actually it's been much easier to slip up occasionally during the pandemic years, because we were everyone was juggling everything. Nobody really knew what was going on. Mistakes were made. It's equally as important, Debs, isn't it, that if the credit file's been affected, so maybe a late payment or something like that, it can affect an application. But again, can they get around that by telling the story?
Yeah, I mean, we can accept unsatisfied adverse up to a certain value. We changed our policy on this last year. Adverse up to £100, we can absolutely consider. The underwriters have got that discretion to do that. We can also look to go up to £250 as long as the overall case is a better case. So what the underwriters are looking there is, is affordability acceptable? Has the client got a good level of deposit? Is the employment history strong? So the nearer you get to that £250 that's unsatisfied, you're looking more on the reliability of the overall case being a strong one as well. If you have a case, for example, where the adverse is something that's slightly different, so maybe there was an unsatisfied parking fine because they didn't know they had a parking fine. If it's because it was down to fraud, because somebody was, their credit file was compromised because of something they weren't aware of, their account was cloned, for example, then you put all of that on the notes. You might need to have documentary evidence to that effect, because if your account was cloned, you'll have something to prove that, either a police report or something from the credit reference agency. So you'll need to have something to back up the claim, but we can consider it. We will look at something like that. You just need to make us aware of it. So if you've got something that is slightly different, don't submit the dip and not put a note on, because the underwriters aren't going to know what's different if you don't tell them what's different. It will just automatically decline. So you need to make us aware of what's going on by adding that note on, and the underwriters can then have a look and see whether we can consider it.
Okay. Sorry, I'm just quickly putting a poll out. I'm quite keen to see if anybody has actually had. Just bear with me. Sorry, I'm turning it out. There you go. The poll's down on your screen, guys. Just a quick poll, just to see if you've had an accepted self-employed application. I'm just quite keen to see how many of you have, how many of you haven't. Phil, for those brokers, you both work for brokers for a very long time. For those to start attracting self-employed applicants on a specialist mortgage, so obviously we are talking about a specialist mortgage, and looking at this 1 year's accounts and these various great little changes in underwriting criteria. How can the brokers let their clients know? Is there anything we can do to kind of, or is it about things like this, educating ourselves as brokers to kind of understand what is necessary and what is needed? But how do we outwardly think that for clients?
Yeah, I think it is all about it's about having these conversations like this, really. So there needs to be far more probably education in our industry and awareness. I mean, the good thing is a lot of the mortgage networks and clubs now, and mortgage clubs as well, if you're directly authorised, are doing more specialist lender events, concentrating on specific areas, whether it's later life lending, self-employed, buy to let. So I think my advice to intermediaries is speak to your network, see what events they've got coming up, or if you're directly authorised, speak to your mortgage club, because I think that's probably a good start. That's my take on it anyway.
And obviously, come and visit us here because we talk about these things all the time.
Absolutely.
I could put a blatant plug in here, actually. So for those of you watching, if you've never watched one of these before, or you've missed some on these topics, obviously we've done self-employed contracts previously, but we have done the retrofit green mortgage. We've done self-build versus development finance. We've done loads of them. They're all available to you on demand. If you go onto YouTube and just search for SFI Live, you will immediately come up to them. You can't miss it. It's an entire channel full of them. We've done over 2 years of them now. And there's lots in there on various different subjects. A lot of it, please, as a caveat, please ignore the fact that there's different rates and things like that, because obviously some of them were 2 years ago. But the information is there. So let's get to Ansh's question, Debs. The client's a director of a limited company, not in the UK, actually in Hong Kong. Is it possible he can apply for a mortgage?
Unfortunately not, Ange. We do expat buy-to-let cases, but we don't do expat residential. So for somebody living in Hong Kong, because he would be considered an expat, it wouldn't be possible for a residential case.
Thanks, Debs. And James just went in. Either one of you can take this. I've had a client who works through an agency for the last 7 years on a contract with a company that has an end date this year, but his contract states this end date will be continually reviewed. He is paid via the agency as PAYE, so previous limited company. How would you treat him? Is he classed as fixed-term contractor or employed?
He's classified as a fixed-term contractor because he's got a fixed-term contract. It could be considered, absolutely. If you've got somebody who's got at least 2 years' worth of industry experience, then it can be considered. However, James, I would add a note to the DIP, because does it say he has got a fixed end date, or he hasn't? He has,
but it states to be continually reviewed.
Yeah, I mean, the fact that he's got an end date is good. We like to have end dates on contracts. He's got to have 2 years industry experience, which he's got. Nothing else there that seems to worry me at this point. But yeah, I'm fine to say do the decision in principle, James. 2 years industry experience, needs to have a CV, and you've got the contract. So yeah, we could absolutely consider that. But you'd need.
We're going to move on to contractors in a second. So for those of you who we just sort of rush through that person's case, but
got a bit ahead there, James. Got a bit ahead there, love. But yeah,
don't you beat us to it. But we are going over to the contractor product in just a moment.
But
before we do that, we're going to give everyone a bit of a breather about mortgage news and fill you in on a couple of other bits of news. First one, I'm just going to share my screen if it lets me. For those of you that know Holly Andrews, you will know that she was pregnant. Well, I can confirm, as per her LinkedIn, if you follow her on LinkedIn, she had a gorgeous baby boy on the 3rd of March called Albert. So please do pop on LinkedIn, give her her best wishes. She is checking on it. We all send her our very best. Mum, baby, even dad, doing really well. So yeah, just I give you that news. It's just a little something to cheer up everyone's day. I know the news isn't great at the moment, but there's lovely Holly and lovely Albert. So Holly will be back with us after maternity. And as Deb says, we've got brilliant Debs to join us instead. And Debs has also taken on her role as well, intermediary-wise. So do feel free to get in touch with Debs. One last thing before we move on to contractors and start taking your additional case and criteria questions, I've got another introduction. Now, Phil, anyone that follows Phil on LinkedIn will know Phil was with this young lady yesterday, but we've had a new addition to the team. So rather than me talk, I'm going to let her talk. So quick introduction. This is, guys, if I can just ask you to mute your microphones for me. I'm going to introduce you to the newest member of the BDM team.
Hello everyone, my name's Jackie Turner and I've just started today, Monday the 7th of March, as BDM for the North at Saffron Building Society, and I'm very excited to be here. Well, so as many of you may know, I'm originally from the States, so I worked in banking in America, which is a very different landscape to the way we do things in the UK. I relocated to the UK and got into retail banking, which I enjoyed. I wanted to expand my horizons, so that I then got my CMAP, and I became a mortgage advisor, like many of you are. So I do understand the perils and the pitfalls and the difficulty sometimes that you face. So hopefully that makes me a better BDM. Some of you may remember me from other building societies. I've worked for a few before I arrived at the best one, which is Saffron Building Society. So I look forward to working with all of you very, very soon. The thing that really stood out for me about Saffron is that it embodies all the traditional values of a building society. So it cares about its customers, it cares very deeply about its employees. However, there's definitely a modern approach to processes and procedures and a look to the future. So I'd say tradition with a view to the future and to progress, that sums up Saffron for me.
So there we go. Little introduction to the newest member of the BDM team, Jackie. Jackie joined on Monday. She's in the role. She was at an event. If everybody wonders why Phil's maybe a little bit croaky today, Phil was at an event yesterday. And he talked all day. So Jackie's with us already. She will get in touch with you. Some of you may know her. So we'll pass on details of Jackie and how to get in touch with everybody at the end of this webinar. So we are going to move on to contractors. So Gilbert, I will come to you. So bear with me. I will come to you on your question. But first of all, Deb's going to pick on you. Let's talk about what contractors are for a moment, because and what that actually means and for this specialist product, because my natural assumption when I hear contractors is like building sites and things like, these sort of small term contracts in that respect. So I think there's a misnomer there somewhere. So do you want to just explain to the audience what a contractor is for the contractor mortgages?
Yeah. So, a contractor really is anybody that isn't on a permanent employment contract. So a standard employment contract would be like myself working here at Saffron on an employment contract, knowing that I'm going to be here until I decide to leave. With anyone else, they could be on a fixed term contract, they could be on a 0 hours contract, they could be on a agency contract. So anybody that is not really on a permanent employment contract. And because of that, we could consider them as long as they've got 2 years industry experience. We're able to look at it for 0 hours contract and for agency work. They need to have 2 years, but they cannot be the main wage earner. So because 0 hours contracts are very difficult to calculate income, and you need to have a certainty that they're likely to be able to bring that kind of level of income again into the future, we need to know that they have not got that reliance on that income for the actual mortgage on its own. So if you're the sole applicant on a 0 hours contract, we wouldn't be able to consider the case. Or if you're an agency worker and you're the sole applicant, we wouldn't be able to consider it, unfortunately. But if you're a joint applicant and you're not the main wage earner, and you have got another income that's higher than that, then we can absolutely consider 0 hours and agency. But yeah, to answer the point, and I'm usually rabbling on as normal, is anybody that isn't on a permanent employment contract or self-employed.
Wonderful. Okay, so maybe a definition time, Phil. Define contractor, self-employed. Just so it's very, very clear for the audience. So I want to. Yeah. Sorry if I seem like I'm speed feeding some of the more experienced.
No, yes,
but there are some new brokers that join us, and I just want to make sure they're clear.
Yeah, I think Deb's probably answered part of this anyway. Yeah, generally there's normally two types of contractors. Either they go through an umbrella company. I mean, the common traits is that you're contracting usually for a specific employer or firm. We can also consider multiple contracts if they're on, 3 days a week with one firm and 2 days a week with another. We can consider those up to 60 hours a week. But generally they are contracting for a specific firm, and they get a specific, usually a daily rate or weekly rate for a specific period of time. So that's, we look at fixed term contractors, unless we're going into the realms of CIS workers, which we can cover off as well separately. So there was also taxation legislation that sort of came in, something called IR35. I don't really understand that. I'm not a tax expert, but my understanding is generally if somebody is a limited company contractor to their own limited company, then that falls outside IR35. But it falls inside IR35 if they're contracting through an umbrella company. And the trend that we're seeing is more umbrella contractors now. Jay, I think you're muted.
Sorry, it's because I coughed. So IR35 is bang on that. It's a way that it's a way to deter companies from having sort of moving employees out of the tax and national insurance implications of being employed, moving on self-employed. So it's actually to try and avoid companies doing illegitimate and naughty and very brave, not exactly HMRC friendly practices, let's put it that way. But as Phil says, the preference with IR35 is that even if you're being contracted, you're contracted to a limited company. So actually there's a legal entity that you are invoicing from and paying into, basically. So that's a really interesting point, actually, about the umbrella companies, Phil, because I thought that'd be lower, not higher. So that was really interesting. Okay, since you've mentioned it, Deb's going to give you a chance to talk this time. Let's talk CIS, invoices, vouchers, CIS in general. Just explain what it means. I'd say there might be some young brokers out here never dealt with this before. So just explain what CIS is and what that means for the applicant.
So CIS is construction industry scheme, and it's mainly for those people who work within the construction industry, such as it could be plumbers, it could be carpenters, it can be people who put in tiles. It's basically, it came in 3-4 years ago, I think. It's quite a while ago. We can accept them. It's a way for taxation. Again, I don't really know the taxation side of it. I'm not going to try and get into that, but we can accept it. For a CIS worker, we will need to have 6 months worth of invoices. You treat the income as the gross income from those invoices, and we'll need to see the bank statements. Now, depending upon whether they're going to run it through a self-employed company, some people do, some people don't, but we generally just work off the 6 months worth of invoices. You can then calculate the annual income by simply annualizing up those 6 months. So 6 months invoices. But we are more than happy to work on CIS workers, just gross up that income.
Wonderful. Debs, I'm going to pick on you again. It's that time. Can you break down the contractor mortgage for me in one swoop?
Swoop.
Yeah, the LTV top, everything like that, all the little basics they need to know. Just one swoop. I'm not going to interrupt you to let you go do your work.
Easy. 90% loan to value, special contractor product range. If it's CIS, we need 6 months worth of invoices, 2 years industry experience. For any other kind of contractor, we need 2 years worth of industry experience, 3 months pay slips, 3 months bank statements. Again, depending upon the type of fixed rate contract, whether we need the income or whether we don't need the income. If you're going to go via an umbrella company, you need to deduct the expenses for that umbrella company from the income. If you get stuck at any time, because it can be a little bit confusing sometimes, you give us a call and we'll talk you through it. But they're the basics. One thing I will say about the experience, it doesn't need to be experience as a contractor. It's just industry experience that we're looking for. It's about having the confidence that at the end of this contract, the client can find another contract within that same industry.
So, yeah, that pretty much answers my next question. My next question was going to be, if I was employed for 2 years as I work in public relations. So I was employed for 2 years in public relations. I've gone off. I'm now contracting as a freelancer. The fact that I've done PR for 20 years probably stands in a good stead for me to get the mortgage.
Absolutely. Yeah.
That's what it is. Yeah.
I get that. I get that, because being, freelance is not easy. And I know finding the next bit of work is down to your experience and your reputation. So really good points in there. Thanks, Debs. I think that covers that one. So I'm going straight over to Gilbert because I feel like I've ignored you, Gilbert, and I really haven't. I have a contractor who's recently set up a company. He is the sole director of and started in November 2021. He has a contract showing the day rate. Prior, he was the sole trader. Would you accept it?
So if the contractor started in his own company, he needs to have 2 years industry experience, Gilbert.
I don't know. Yeah, he started the company in 2021.
Yeah, if he started in November 21 and if he became a contractor in November 21, depending upon what his experience is overall, would depend on whether or not we can consider it. When you're a contractor, it's common to run that income through a limited company. So that will often happen for taxation purposes. And then you, as a broker, need to decide whether you want to submit it as a day rate contractor or whether you want to submit it as a self-employed case. So it depends on how much experience the applicant has got overall as to whether it goes through as a contractor. If he hasn't got enough experience to be submitted as a contractor because he hasn't got 2 years, you need to then have to wait until you got 12 months worth of trading accounts, which in this case, if he hasn't, you'd need to wait until November 20. What year are we in now? 22. You'd need to wait until November 2022 until he's got 12 months trading account, if that makes sense. So if the client's got 2 years industry experience, then you can submit it as a contractor. If he hasn't, wait until November 2022 when you can submit it as a self-employed account.
Okay, I got that. That's good. That's good. Yeah, no, all good. I got it. I'm sitting going, I'm trying to figure this out in my little brain, but no, really good. Thanks, Deb. Brian's come back again. Self-employed individual who has been advised to go limited and VAT registered. I was going to ask this, so I get where Brian's coming from. So you have been self-employed for a period of time as a freelancer. I freelanced for a long time before I joined my company, and I was constantly told that I needed to go limited. I need to go VAT registered if I go over X amount. So I had to. So basically, I then started a limited company in order to keep my clients happy. So this is where, and he's just updated that. Yeah, so it's effectively a continuous business, but it's fine, isn't it, Deb? Is that continuous business, or would you only take it from the limited company time?
Yeah, you'll need 12 months trading account in the new business style. So once you've actually got, if your client has got 12 months limited trading accounts, then absolutely submit it. Just pick a self-employed product range for no more than 90%. If your client, Brian, has got less than 12 months limited, then you'll need to wait until they do have it. So the underwriters will need to see that it's running effectively as a limited company, even though it's got continuous business.
So actually, this is quite a valid point, isn't it? So let's just pretend I'm PR freelancer and I go, oh, my client really, because of IR35, I need to start a limited company. Otherwise, they're not going to continue paying me. I'm going to lose those contracts. actually, I'm almost restarting, aren't I? Because you're going to need 12 months of accounts with that limited company. So we need to prepare our clients for that, don't we?
Yeah, you need 12 months trading as a limited company.
So, Brian, that actually turned out to be quite educating for all of us, I think. So thank you for that. And I hope it answers your question. So
one thing I'm going to say about contractor as well, is it happens a lot, is that if there's a break in contracts, so say, for example, Joe Bloggs decides to take a break for 2 months because he wants to have a really long holiday, that's absolutely fine. And we can consider that. If you've got a break, I would say, of more than maybe 4 or 5 months, then put a note on the dip to say Joe Bloggs has had a break in contracts of 4 to 5 months. If you don't put a note on, the underwriters might think that you couldn't get a contract. So you need to make it clear as to why there was a break if it's more than about 4 or 5 months, because the assumption could be you couldn't get a contract, not that you chose to take a break.
Yeah, it's quite common in IT. Sometimes we see IT contractors taking 3 months out or slightly longer because they want to upskill and take further qualifications, which will ultimately increase their daily pay rate as well. So it's a really, really good point, Deb. That is. Yeah.
Well, they might have worked hard and they just want to time.
Yeah, absolutely. Why not? Yeah.
And it's been an unprecedented, I use that word again, but unprecedented period in that some people have been quite adversely affected by COVID. Some people have been quite ill and had to take three months to get themselves back on their feet again. It's hit people in such different ways. And again, I don't think we can say this enough to tell the story, can we? I really don't. It's the same as anything, the rejections from, as Phil was saying earlier, the sort of high street banks that are algorithmic, that's going to happen. The benefit of being hands-on, manual, common sense lending is why Saffron and lenders like Saffron are excelling in this period, because you have literally adapted based on what you've seen the world doing around you so quickly. And it's a testament to being a smaller lender, isn't it? You can adapt quicker.
Yeah, I think it's fair to say, we'll give stuff a fair hearing. We're not going to be able to say yes to everything, but we'll try and tell you why we can't help as well. We always try and be transparent. I'm gonna
chuck a caveat in here because Tony's not here, and I've just realised he's going to kill me when he gets back. When we talked about adverse earlier, Debs was very, very clear on adverse and what we can accept and how flexible we can be. The adaptations and the changes to our criteria was not so we can accept bad credit. That's not what that's about. This is to do with blips and small issues. So I have to put that caveat in, because when we didn't put a caveat in a year and a half ago, we got an abundance of bad credit applicants through. So just for Tony's benefit, and I could feel myself getting a slap on the head for not doing it earlier, just for the caveat for that, it's not bad credit, but it's flexibility to look at the situation and listen to the story. He's going to be happy I said that as well.
Yeah.
All right.
He'll be marking us on YouTube later when he comes. Yeah.
I'm waiting for it. I've turned all the notifications off on everything during the webinar. I'm going to turn them all on and have text messages go, you haven't said it. So I've done it now, Tony. So I know he's watching. I guarantee he's watching. So I think that pretty much covers everything, unless I've missed anything on those two products. So we can move over to more case specific. So the guys that are still with us, there's 70 of us here. If you've got any particular cases, unusual cases, something out of the ordinary, something you're not quite sure how to deal with, maybe something recent, pop it in the chat box. Please leave out personal information, obviously, as you guys have brilliantly done today. So just talk about your case and we'll see how we can go from there. I'm going to bring up something that I want to talk about a little bit, and it has got a little bit of politics to it, so I do apologise, but only because to me it's really, really important. We've talked about green finance a lot as a society. We were one of the first to come out with a unique green product. Now, we don't label it as a green product, so many of you watching might not realise we do have a green mortgage, and actually, this is where the politics comes in. There is a lot of greenwashing going on across every industry. We're already net zero. We've got this. This is our green product. This is our green. Please check them. There's a lot of greenwashing going on. But also, a majority of lenders, green products, celebrate the fact you can afford an A or B rated energy efficient home, which, as we all know, puts you top end of the market. Of certainly with first-time buyers, you're practically out of the market. So I just want to bring up the retrofit mortgage, Debs, I don't know, and Phil, because it's one of my favorite products. Because I didn't know this when it first came out. The rates are almost the same as, or they are exactly the same as other resi products, but you get an absolute benefit of a reduced rate within 6 months if you improve the energy efficiency of your home. Now, that to me is a product that improves the crappy housing stock this country has. Which we all know we're one of the worst in the world, for it, the developed world anyway, for our energy efficiency. So, Phil, on the spot a bit, but tell us a little bit about the retrofit mortgage. Obviously, I've just done quite a bit.
Yeah, no, you've teed me up. Yeah, I'm actually thinking, you might want to apply for our other vacancy, Jay. You've teed me up.
I've been doing this a while now.
So our retrofit mortgage is aimed at probably the majority of housing stock in the country. So we will give a rate reduction of 0.01%, so 10 basis points off the rate, if the energy efficiency is improved to a minimum of band E. I've seen a number of EPC type products recently, and they're aimed at A's and B's and C's. So I think we're aiming at a lot of the housing stock in this country, which is very traditional and inefficient. And as you say, that needs to be completed within 6 months of completion. So we give them 6 months to do the works and that, and then they'll benefit from that rate reduction on our retrofit mortgage. And it's something we probably need to, we definitely do need to shout about a lot more. And hopefully this is a stepping stone to further green, environmentally friendly.
I think what's really key for me is I'm quite educated. I'm an ESG specialist. So for anybody who doesn't know what that means, it's environmental, social, and governance. So I look at businesses and look at their policies and their activities, and then I look and say, actually, you're lying about that. That's inaccurate. That's not. So I'm quite a tough cookie in this area, and I thoroughly believe that we all have a right to want to change the environment we live in. And I know that there are going to be Gen Z first-time buyers that are coming through. There are going to be millennials who have really taken note and saying, I want to change this. But there's also a bit of a gap between those wanting it and brokers saying, actually, I can get you this product. And we are trying to educate on that. And we have got a webinar coming up in April all about this. And it's a difference. May. April is not that, May. But we are going to be pushing this quite hard. Now, just to elaborate on what Phil said, I'll show my geekness, but the average house of, say, an ex-council house that's been bought has an energy rating of about an F or a G, which is, is low, but that's very commonplace for our property market. What's really, really interesting is how you can get from a G to an E so quickly. Just another couple of inches of insulation in your loft. Adapting to double glazing. If you're an old building, put an internal glaze in, so something that can just block out. All these things don't cost huge amounts of money. You start getting to a bit more when you look at more energy efficient boilers and things like that. You might be looking at a bit more money, but it doesn't have to cost a lot. So, Debs, can anybody apply for the retrofit mortgage? Is it open to new purchases, remortgages across the board?
Yeah, it's open. It's the same new build. You wouldn't necessarily need to do it, as it wouldn't be worth it.
That was the flip of the gun, sorry.
But yeah, it is. It's open to people to do it. It's a product that we've had now for a couple of years. Must have had it about 2 years now, but it is definitely it's a product that we try and promote. And I think it's something that we review as part of our product range, and we're trying to review again, I believe, this year. But yeah, you can definitely apply for it. It's like all of us, I think, with everything that's going on in the world, we're all trying to now having to, actively look at how we can reduce our energy bills. And I think this is the way forward. As you say, it's very easy to try and change your EPC rating.
I've just, you might know, I've just recently done this, but I've just written up a bit of a write-up about the retrofit product, because it's something I'm really interested in. I work with Laura, who is a brilliant product manager within Saffron. We got our heads together and sat down and said, how do we talk about this? What do we say? And what was really interesting from my research was jumping from an F to an E will knock on before any prices go up. So as we stood before the prices went up this year, would save you £230 a year on your energy bills. So just think about that for a moment. When you're jumping up £1,000, this could be a way of saying to your clients, you could do something for the environment, but actually you're doing it for yourself. As Deb just said, it's a way of cutting those bills down. Yes, there's a slight expense in maybe putting some insulation in, or, you know, it can be stupid things as well, though. Silly little things like putting draft excluders down doors. I know it sounds really silly, but that saves money. So I'm not trying to be Martin Lewis here, but I just wanted to kind of bring that up because we've not talked about it for a while, and it's one of those things that's going to be the future. And we're seeing a lot of rumblings from the actual consumer now and the purchasers, so first-time buyers, for and other people that are looking now and going, actually, I want a better and efficient home. So have a look at the retrofit mortgage. More information is coming, so do look out for that. We've only got 5 minutes left, and we've got quite a lot still to cover in regards of how to get in touch. So, Debs, can I have the phone number and the email address to get in touch with you, please?
Certainly can. Phone number 01799 582 925. That's 01799 582 925. And the email address is IST, that's Indigo Sierra Tango, at saffronbs.co.uk.
Hey, voila. And Phil, let's just talk about the website because it was new. It's not really new now, but it's being updated constantly. One of the biggest changes is the members area. How do people sign up? What do they need to do? What information do they need? And what do they expect to find in the background once they sign up?
Yeah, I mean, just saffronforintermediaries.co.uk and just hit the register button in the sort of the top bar, the top corner. That way, you will get updates from us. You'll get product updates, criteria updates, and we hope to be getting further news. Regular news articles as well that we feel are relevant to you without bombarding you with stuff as well, and you've obviously then got access to our broker portal, so you can obtain an ESIS, submit DIPs and full mortgage applications. Just
so the viewers know, when you sign up for the portal and you are a member, you get signed up to the email mailings. We don't bombard you, we don't spam you, but it does keep you updated with product updates, new products that are coming to market or in market. It does tell you about these. Fundamentally, it tells you when the webinars are out. Also, for those that don't know, we do have SFI Not So Live, which is our podcast. Something to listen to. My voice is going now. Something to listen to in the car, on the dog walk. It's an hour of us, journalists from the industry, other CEOs, managing directors of mortgage clubs. We've had some cracking guests on there. There's 8 episodes available now. Go on to Spotify, Apple Podcasts, Google Podcasts, just search for SFI Not So Live. We're back again. This time we're doing self-build and we're doing development finance with a couple of specialists. So really excited about that. That's coming up in April. We will send the links out via our socials on how to sign up. Just very quickly on a poll up just a second ago for the benefit of the guys in the audience. I've asked, how would you like to interact with us more in the future? And it looks like webinars are the way forward. 85% came back with webinars, where they don't really want to see you in person. They don't want to go events one-on-one, Phil. Just have a rest. Sit on the webinars. It would be it's fine. But guys, thank you for filling out the polls. It does give us real insight on how we can talk to you. If you've got any ideas on topics, feel free to email anyone in the team. They'll be really pleased to talk to you. And don't forget, as Deb said, chat function on the website. It's a great way if you haven't got time to pick up the phone and you're working on loads of cases, but actually you can just have a chat in the corner. The guys man that. Debs, when's that manned?
Every day. We try and log it on for 9 o'clock, 9:30, probably right through till 5.
There we go. And you'll be very pleased to know your CPD certificates are currently on your screen. So if you click on that, you'll be able to download them, save them to you, so you can put that against your CPD and have some points on us. So that's it. That's our hour up. A big thank you to Debs and to Phil. It's been really enjoyable not having Tony around. I'm joking. But he will be back from his holiday and with us on the next one if he doesn't break anything. I'm hoping God he comes back with both his legs because he's skiing. We'll have another picture to the wall in the background. But thank you so much for joining us. CPD certificates are on the screen. I say we are back again in April. So from all of us, it looks like it's sunny here. It looks like it's sunny where you are, Deb. So enjoy the rest of your days and we'll see you next month. Take care, everyone.
Bye now.